Welcome back to Explain the Charts, and today we're taking a deep dive into Intel Corporation stock, Intel, and analyzing the news and chart data to see where it's headed. Recent headlines have been dominated by Intel's new strategic partnership with Amazon Web Services, a multi-year, multi-billion-dollar collaboration to produce custom AI fabric and Xeon chips for AWS. This move is a significant boost for Intel, demonstrating their commitment to the rapidly growing AI market and their ability to secure major contracts with key players. Intel will manufacture these chips on its most advanced process nodes, showcasing their continued technological prowess. The partnership also highlights Intel's commitment to its new Albany, Ohio facility, a key hub for US-based semiconductor manufacturing. Looking at the daily chart, we see Intel has been on a wild ride over the past few months, experiencing both significant rallies and dips. The recent news about the AWS partnership has clearly injected some bullish sentiment into the market, and we can see that reflected in the price action. The stock has climbed above the $35 level, a crucial resistance point that has been tested multiple times in recent months. However, we need to remember that this rally is still quite recent, and it remains to be seen whether it can sustain itself. The $35 level will likely act as a key point of support in the near term, but it's crucial to see if the stock can break above it and hold on to those gains. If the bullish momentum continues, we could see Intel retest its all-time highs, but this is a longer-term outlook. Now, let's zoom in on the 1-hour chart to get a more granular perspective on the recent price action. We can see a clear upward trend over the past few days, with the stock making steady gains. The recent rally has broken above the previous resistance level around $36, which now serves as a key level of support. The stock has since pulled back slightly, but it remains above this crucial support level, indicating potential for further bullish momentum. The current price action suggests that Intel is consolidating its gains and could be preparing for a breakout to new highs. However, we need to keep an eye on the overall market conditions, as INTC's performance is often influenced by broader market trends. If the broader market sentiment turns bearish, Intel could face some pressure and pull back. It's essential to consider the overall market landscape when making trading decisions. Another crucial aspect to consider is the level of volatility in INTC's price action. We can see that the stock has been experiencing increased volatility in recent days, which is often a sign of indecision in the market. This increased volatility could make it difficult to predict the stock's direction in the short term, and traders should exercise caution. Let's shift our attention to the 15-minute chart to observe the recent price action in more detail. Here, we can see that Intel has been consolidating its gains in the past few hours, trading within a narrow range. The stock has found some support near the $21 level, but it's yet to show a clear breakout from this range. This consolidation phase suggests that traders are waiting for a catalyst to push the stock in either direction. It's a bit too early to tell whether this consolidation will lead to a new leg up or a correction. Keep an eye on the news and economic data releases, as these events could be the catalysts that break the stock out of its range. Now, let's look at a specific period on the 15-minute chart, focusing on the past 3 hours. In this time frame, we can see a period of heightened volatility, with the stock fluctuating between $21 and $21.50. This volatility highlights the indecision in the market, with traders struggling to find a clear direction. The stock has ultimately pulled back from its recent highs, but it's still trading above the key support level of $21. It's important to note that this increased volatility could make it difficult to time entries and exits in the short term. To summarize, Intel has been driven by the positive news of their partnership with AWS, and this has led to a recent rally in the stock. The $35 level on the daily chart will likely serve as a key level of support, while the $36 level on the 1-hour chart acts as a crucial support area. On the 15-minute chart, we see consolidation with support at the $21 level. However, the increased volatility suggests that the stock's direction remains uncertain in the short term. Traders should exercise caution and closely monitor news and economic data releases for potential catalysts that could break the stock out of its range. In the long term, Intel has the potential to retest its all-time highs, especially if the bullish momentum continues and the stock breaks above the $35 resistance level. However, it's crucial to remember that the market can be unpredictable, and INTC's future performance is subject to a multitude of factors. As always, responsible trading practices and sound risk management are paramount. Thank you for joining us on Explain the Charts, and we'll be back with another in-depth analysis soon.